Well, hello everyone. I'm Ed Parcaut, one of the hosts of Real Estate Jerky, and we're doing our normal live. And I'm here with Bobby Atkins. How you doing, Bobby?
Doing great. How you doing, Ed?
Good, good. And we usually what we normally been doing is kind of complaining.
That's the easiest thing to do.
No, basically we want to let people know what's going on with the market, what's happening, and you've been having some buyers that are having difficulties lately just because it is the market. And I was talking to one of the listing agents yesterday, and they're talking about how nobody wants to take a contingent offer.
Yeah.
Because they don't have to. And the problem is, as a seller, you are not always the best buyer. And that's kind of what we want to talk about today, right? So I'm going to put you over here, and you get to talk more now. Now you're controlling. All right. So that's the story of today is about when you're the seller, what you're going to get, and then when you're the buyer, what you need to do. So
yeah, so it's pretty common right now that we're having people that want to sell their house find a replacement property. We're not seeing as many folks move out of state, but people are still moving, right? And they want to switch neighborhoods, or there's a litany of reasons, right? But for the most part, people just want to move up.
Yeah, or somewhere.
Yeah, and they see that their house can sell for a record price, and so they're really excited about that. What's hard is getting it to translate over to once we get in a contract on their property. Now they have to shift their mindset of, okay, this great deal I got on my house, I'm not going to get a great deal on the next one. So if we got $20,000 more than we were expecting for your house, you might as well just expect you're giving that to the person whose home you're purchasing.
Right.
And that's a tough pill to swallow, because we see, back in 2020, people could move out of state, sell their house here, and buy something, get a great deal, right? Like in
well, they still can. It's just not at the lowest rates that they were, houses were. They went up in value, but we've went up in value also.
Yeah,
I think it's the mindset shift that is hard for sellers to see when they go to be a buyer.
Yeah, and it hurts as a buyer right now because you're having to write the cleanest offer, and you're not getting any kind of concessions. I mean, whenever there's like a property that I wrote an offer on that we didn't get, I'll go back and look and see. And if you look down at the bottom, you'll see there was 15 offers, no concessions, things like that, right? So you just have to go into the mindset of saying, look, I am not getting any kind of breaks in this market. I'm going to be waiving contingencies if the property is nice enough. I'm going to be paying over. Writing an asking price or a list price offer is just, honestly, it's a waste of time for everybody. So
right. I just think people are they just don't get. I mean, what you just got on your house, you're going to just turn around and offer it on the next house.
Exactly.
So you are going to get, and because I had some clients call me up and they're like, "Hey, we're thinking about buying a piece of property now on acreage," and I'm thinking, why didn't you think about this like 2 years ago, or because their house is record prices now. Well, yeah, your house has always been because you got it during the downturn, and you got it really inexpensive, and you should have done this a while back. And because everybody's doing it now, and there's less houses coming on the market, so it's so much tougher. People are talking about a wave of foreclosures that are coming. I don't think they're going to be as big as what people think, right? Because it's just a few. I mean, you have to look at just even if there was 300,000. I think I talked about it with one of our last one. I'm sorry, kind of getting off of it, but you got to think about, on average, it used to be a third of all mortgages are out of California, right? Just because we're such a big state. We have 40 million people, or we used to have 40 million people here. We probably have 39,300,000.
Yeah. The rest went to Florida or Texas.
Right. Which, I mean, and since you brought up Florida, the rents have went up 38% year over year there. Yeah. I mean, rents overall have went up 18%. And so it's just what's happening in the housing market's happening in the rental market. So you just have to get in there. And with the rates increasing like they have, you can't play around. You need to get to the point of doing this because rates are moving up the fastest I've ever seen them move up.
And that's saying something because you've been in the business, what, 25, 30 years?
Not that long, but 20 some years. Yes.
20 some years.
Yeah.
Okay.
I know I had the gray. Normally I shave the goatee so close you can't see all the gray.
Yeah.
But Yeah, so I mean, this is back. We're in the 70s right now. So if you want to know what's happening, we're in the 1970s, and that's what's happening. And if everything plays the same way, then there's going to be a huge change coming.
But well, and you know, the house. Say you're looking at the same house, and it was exactly a year ago. I would estimate, and you know, I'm not on the lending side, but I would estimate that it's probably costing you $300 more a month than it would have cost you last year.
Yeah, definitely, it's
Yeah.
going to be that way because as rates keep going up, your payment's going to go up. However, the positive thing is we are going to hit a recession, and we're going to see from that rates go back down. But we just have to get through this period of time. And I've been telling my clients, don't freak out about the rate. It's the house. Get the house that you want. Don't worry about if you're in the 4% with an interest rate, because you're not going to be there forever. And that's still historically where we're at. We're still historically low rates. It's just we were so spoiled for that 2-year period of having rates so low. And because we were in a recession, which people, you know, the pandemic was a recession. If you look at the chart we showed last week, we were in a recession during that period of time. And then we came out of it and we're going crazy. And the Fed's going to overreact, and we'll see that this week and eventually, and then just cause a problem where we go into a recession. And I know we talked about that last week, but
Yeah.
something to talk about all the time.
Like I said, they're always twisting the knobs, trying to dial it in, right?
Well, they didn't react fast enough because they should have reacted a long months ago, but they didn't.
Yeah.
And now they're behind, and so they're going to have to overreact, and then they're going to cause a problem.
I was going to say, because normally the hot market, you know, when people think about buying and selling, it's spring and summer, right? Is that going to, how much is going to affect the summer market, do you think?
Not at all.
Yeah.
Because think about it, we're still 1 in 4 is cash. So, and now, you know, how many offers are sellers getting, especially here on properties, because we don't have enough homes being built still, or enough homes on the market. So what that means is instead of having 24 offers, you're going to have 14 offers, or you're going to have 12 offers. So it might make it easier for people to get into contract with this happening, because there's going to be less people going for the same house.
Yeah. Well, and another way to be more competitive, because right now, I mean, anything in the FHA range, even all the way up to like right under 500,000, I've had, you know, offers outbid by cash buyers, right?
Right.
So one thing that a cash buyer brings in is obviously cash. There's no loan,
obviously,
right? But also their time frames, and so that is one way we can be competitive with cash buyers, even if we have a loan. You know, if we have a solid loan, we have a great credit score, great lender, we can still say, hey, we can get this done in 15 days. We're gonna have to hustle. We're gonna have to pay more for an appraisal that's rushed.
But yeah, it can be done. It's just hard to compete against cash in this market, but eventually that will slow down.
Yeah. You know, as long as there's a seller that doesn't want to sell to an investor,
right,
but you can get similar terms, that's going to help you.
Yeah, and that's what people have to realize. A lot of these sellers don't understand that a lot of these cash offers are REITs and other people buying that property to be a rental.
Yeah.
And they have to be careful with that. So how many rentals do you want in your neighborhood?
Yeah. Or, you know, do you want to leave your neighbors with, you know, another renter on the block?
Well, some people just don't care.
I'll say kind of depends.
Depends on who your neighbors are.
Yeah. I wouldn't do that
if you got along.
Yeah. I like all mine. I'm fortunate.
Oh, really? That's not what I heard. You know. Yeah, so there we go. So basically, if we'll reiterate what we were talking about, and if you guys like what we do, please subscribe and, you know, like, share, all that kind of stuff. And, you know, we do this goes to our YouTube channels too. But back, if you're a seller, what you're going to get from your buyers buying your house, when you're the buyer, you're going to give it to the seller. So just understand that, and be a reasonable, realistic buyer. And that's I think the hardest part, because people want to get the most for their property, but then they don't want to give the most. They want to get a deal on it. Well, that's not going to happen.
Yeah. And I'll tell you right now. So the offers that we're writing and almost getting accepted, depending on, you know, the buyer, is, you know, we're given at least a $10,000 appraisal guarantee, right? Because we're writing offers higher than what we find comps for, so we know we're going to pay more.
Right.
So the seller has to have some kind of guarantee. There's no way in heck you're going to be asking for them to buy the home warranty. We're going to pay for that.
Right. Can't ask for anything.
Yeah, we're going to try and shorten the terms too, unless they need time. And in that case, this is one that buyers really get bent out of shape. The seller might need, say, you know, 3 weeks to a month of rent back. Then they go, oh, are you kidding me? You know, I'm going to own this place, but now they're going to be renting it back from me. You know what? If that what it takes for us to get in a contract, and, you know, you don't move in for a month, that's what we have to do in this market. It's,
Yeah, but you don't make your first payment for 45, usually 30 to 45 days. So
Correct.
It's not a big deal.
Correct. And sometimes people say they want free rent back, and that's a tough pill to swallow. But either way,
do you want the house or do you not want the house?
Exactly. People get, so here.
Another thing you can do too is, as a buyer, pay for the seller's escrows.
Yeah, you can do
fees.
that.
Yeah.
Well, and so maybe just to kind of tie this in at the very end, people get hung up on the silliest things, right? So I have people that say, you know what, I don't want to offer 5,000 more than this. That is my final price. And I go, okay. I was like, well, what percentage of that 5,000 of the total purchase price is it? Especially when we're in the $500,000 range. I'm like, that's like 0.01% of the total price that you're going to kill a deal over, And then they think, okay, maybe that's not so ridiculous.
Right. Well, I still think people still don't get the fact of what market we're in.
Yeah.
Because people keep saying, when's it going to go back to a normal market? And I keep telling them, this is the normal market now.
Yeah.
Right. We've been in it long enough. This is the market, and it's going to be like this for a while. I explained to people. I explained to the guy yesterday was thinking about buying the land I was telling him about with the house on it. I'm like, we're going to be in this situation for a while. I mean, don't get me wrong. Our government is trying to destroy our situation as much as possible with the oil and everything else that they're doing and not letting us, because they're pushing their agenda. They're really trying hard to destroy this market, but people still need places to live. That's the difference.
Yeah.
And with 11 million jobs out there available, it's not like there's no jobs where people can't get jobs. So,
well, and one more caveat. People say, "Oh man, well, I'm just so worried that I'm going to overpay for this house, and it's not going to be worth it." And like you and I have discussed, in a year from now, if you paid over for that house, you will have recouped that equity, right?
Right.
But I always say, there's no guarantees in any markets. If for some unforeseen reason it goes down, would you be less happy in the house? Or because if it's the house you want, it shouldn't really matter what the value is. If you're planning on staying in long term,
right,
you should be happy either way.
You're right. And the issue is, and I try to explain to people when they try to get a good deal on a house that's say it's worth 500,000, they got it for 475. The moment they close at 475, the house is now worth 475, not 500.
Yeah,
and it's the complete opposite the other way. If you're writing an offer and they want 475, you end up at 500. The moment it closes at that value, guess what? That is the new value, new comp for the area for that purchase price.
Yeah.
So now that house is now worth it, because there's this thing in our industry to put out there to say, when will you recoup what that price is? How many months in the future? Most of the time it's 3 months. But if you really look at it to the fact that your comp is that you are the new comp at that. So that means all the other houses can go up because of yours. And that's important. And that's what's happening. And people don't realize that, but because it's a hard pill to swallow when you're selling a house and buying another house, trying to get the best deal you can. And it's not going to happen right now.
Yep.
So you just need to be a realistic buyer when you are the seller.
Yeah. And be patient, because it's going to take a while.
That's right. And thanks again for letting us talk for, in your ear while we're here.
Yeah. We always appreciate you listening.
Yeah, that's right. And thanks for when people comment and let us know. I appreciate it. You guys have a great day, and thanks, Bobby.
Thanks so much, Ed.
All right.